My name's Dave Dubeau, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, everybody. Let me ask you this. Have you ever taken your car through one of those express car washes? I mean, they are convenient. They are fast. It does the job. You don't have to get dirty. You don't have to get wet. But have you ever kind of looked at the other side of things as an investment opportunity, as a way to create cash flow? Well, if you have, you're in for a real treat today. Zooming in all the way from beautiful Boulder, Colorado, we've got Whitney Elkins-Hutten. Whitney is a very experienced real estate entrepreneur. She's an educator, she's a coach, and she's also very deeply involved with a big investment outfit, passive investing. And one of the things they do is they invest in these express car washes. So, Whitney, welcome to the show. Great to have you.
Yeah, thank you so much for having me here.
So, tell us a little bit about big picture. What is the whole opportunity with these express car washes? What does that look like from a business perspective?
Yeah. Well, and that is one of the amazing things that I get to do in my role as director of investor education at passiveinvesting.com is help people connect the dots and understand like what is not just passive investing, but like, this world of express car washes and how it might be a good fit with their portfolio. We invest in express car washes. We like acquiring, mom and pop, facilities, also developing our own facilities. But really what we're looking for is to, build a cash flowing portfolio of say 100 to 150 locations and perhaps IPO that or do a roll up exit to a REIT. But, when we think of what goes into that portfolio, we're very much focused on the express car wash, which is kind of the Chick-fil-A model. So it's not you're driving the car into a bay and scrubbing the car down yourself and dropping quarters into the wall or scanning your card. It's not the full service car wash where you have an army of people that are ready to come out and vacuum your car, dry your car. It's kind of the hybrid in between the self-serve that's attached to a gas station and this full service model. So, people are busy these days. They don't want to wait in line. And they don't want to wait for a long time to get a high touch product. So this product allows somebody to drive off the street. If they'd like to vacuum the car, they can certainly do that. Otherwise, they're going into a tunnel. The tunnel is tech enabled and allows it scans the barcode of that customer's subscription, which that is a value add to the investment itself, because most car washes are individual pay. We actually put our customers on a subscription model. And the tunnel is smart. It will know like, hey, like what kind of washes, waxes, shines does this person get? Do they get them every single time they come through the tunnel, or they just get them like every 4 times they come through the tunnel? Because there's different levels of memberships.
Yeah.
And so this is a really unique opportunity to take advantage, layer on technology to something that, an industry that has been pretty, is transactional to date. This is a $33 billion and growing industry.
Wow.
And this particular sector of express car washes is growing about double that. Like, instead of like 3.8, 3.9%, it's growing at almost 8% year over year.
That's huge. Okay, interesting. So I want to unwrap a couple of things around this, Whitney. So first thing, I've got one of these things just literally down the street from me, and I go through it on a quasi regular basis. So you're saying that, like, do you make everybody who comes through the car wash sign up for a subscription, or because this one has both options, you can do the subscription or the one-off type thing, because we have a lot of people coming from out of town. So are all of them 100% subscription, or is it either or?
No, they still have the opportunity to do a single pay, but we really incentivize the customer to do the subscription agreement. I
Yeah.
mean, if you think about it, they might pay like, $19 to $25 for a wash, whereas they could do a $25 monthly subscription. And I think that's where the investor sometimes has an issue, understanding how this is an investment because they're like, well, if they pay $19
Well,
every time they
yeah,
come.
they don't understand that it only costs about 42 cents to deliver that wash kind of thing. So yeah.
Exactly. Yeah. And really for the mom and pop owners, this is the value add opportunity that we have in the arena, in the United States. Most mom and pop owners that we're purchasing from, they're charging their expenses all in are $2.66 per wash. And so even if our average customer on a subscription is washing, say twice a month, we actually figure it 1.8 times a month, but round that up to two because it makes the math easier. Even if somebody has a $25 a month subscription, there's still a hefty margin there. But what happens when an owner like us, an owner operator like us comes in, we have our homegrown third-party management company that we've developed in-house, and we can lower our expenses from 266 a wash down to 83 cents a wash.
Wow. Yeah.
Okay,
That's
now we
huge.
have supercharged, that margin there. Do we still allow for single pay? Absolutely, but the power is in that monthly subscription.
Of course. Yeah. That monthly recurring revenue, that's huge. And that's adds so much value to the value of the company itself. It's, phenomenal. So that's interesting. I would have thought that the average, if somebody's on a subscription, they'd be thinking, "Hey, I've already paid for this. I'll bring the car through twice a day and get my money's worth," kind of thing. It's probably how it starts off, and then they fizzle out fairly quickly. Is that what happens, or what do you see as the trend?
It really depends. I mean, if you have your Lyft drivers, certainly they're bringing their car in like once a day, to get it all cleaned.
Yeah.
And mind you, it's not full service. So we're not doing the vacuuming unless
No.
they're getting the higher subscription, say like at $45 a month as opposed to 25.
Yeah.
But even then, people are busy and they might have, my husband, he would wash the car every single week if he could, but realistically, he gets over to the car wash about twice a month.
Yeah, we start off with the best of intentions, right? Okay, that is really interesting. Another question for you, Whitney. With your experience, you guys have done a lot of these, and when you're buying these facilities from, like you say, mom and pop operators, are they already set up as a full-blown express car wash, or are you taking older spray wash type facilities and converting them into these express wash facilities?
What we're looking for is the length of the tunnel and how that tunnel can be engineered. So normally those spray car washes won't allow for
Yeah.
that tunnel to be developed without kind of tearing everything down and re-engineering it. So yes, we're mostly looking for people that already are, owner operators that already have, 60, 80, 120-foot long tunnel already on their property. And this what makes it advantageous for us sometimes to develop our own location.
Yeah.
We can get in at a lower cost basis. Buying a piece of land, say in a tertiary market that's right in that Saturday, like, traffic pattern, with limited competition within, say, like 3 to 5 miles. We can probably, get that land much, less expensive than into like an existing primary market. And
Well,
then,
not only that, I would
developing from
imagine for
there.
efficiencies, you guys sound very efficient with the operation side of things. So part of that would probably be, making sure that most of your facilities are set up the same way, same equipment, same supplies, all that kind of good stuff. So yeah, it'd probably be a lot simpler for you guys just to build from the ground up than to retrofit existing facilities.
Yeah, it can get I think where it gets a little sticky is, if you're looking at a portfolio of properties from an owner operator, and most owner operators in the space have fewer than 5 locations.
I would
That's
imagine,
one of
yeah.
the reasons why they're getting out because there's no third-party management. We actually developed the first third-party management company for express car washes. So the owner operators are exactly that. They're owner operators. They're not able to make this a passive investment. But you tend to get a mix of, cable versus, conveyor belt type
Mhm.
car washes, which each has their pros and cons, to them. And so, that's really where we take care to like make sure that there's kind of like standard equipment or at least standard type of equipment over the various locations.
Yeah, no, that makes a lot of sense. Well, that's cool. So lots of upside to these express wash facilities, especially if we're talking to somebody who's interested in buying their own, starting their own, not necessarily, you know, doing it as a part of as a passive investor kind of thing. What are some of the what are some of the downfalls to this investment class?
Yeah, if somebody is getting started like actively, I mean, first one of the challenges you're going to have to overcome is just the cost of the land, and then do you join a franchise, or do you develop your model from the ground up? I mean, I
Mm.
would say, most people are going to be all in $3 to $4 million from the very get-go, in addition to the cost of the land.
Wow.
And that's to
Okay.
get built. Your timeline to get built is probably going to be somewhere between 10 to 18 months, depending if you're already entitled on everything. Now you stick the key in the door, you turn on the conveyor belt. Now you got to go get customers.
Yeah.
Okay, do you already have a brand built? Um, and then from there, how are you going to scale? Are you going to, try to elevate yourself out of the business as an owner operator, which means you probably need to get to 7, 8, maybe even 10 locations before you're going to be able to afford to hire your regional operator. And that's really kind of the threshold you need to be at in order to get, the best buying power for like your chemicals and stuff like that.
Yeah, that makes a lot of sense. All right, very cool. Well, let's switch gears for a second. So you've got a very important role with, the whole passiveinvesting.com team. You are the director of investor education. So does that mean you are the person who's educating your existing investors or educating potential investors or both? What does that actually mean?
Both, yeah.
Okay.
So it's essentially, I'm meeting the investor where they're at and helping them develop their skills so they can get into their first or next deal with confidence with us.
Hmm.
And I used to be a director of investor relations at a sister private equity group. And, this is, I get to not do the investor services side of things and really spend my time with the investor and help them fully understand what passive investing is, all the different asset classes that we offer, and what might be the best fit or initial investment to fit their goals.
Okay, so it's more for the people that are thinking about investing with you guys. You're showing them what the different options are. Am I
I
understanding that
mean, it
correctly?
could be for our current investors as well.
Okay.
I mean,
To show
we're,
them different asset classes and
yeah,
different things that you guys do.
somebody might engage with us and then have done multifamily before, but they don't understand, first lien position, real estate debt. Like we have a debt fund that's open right now. And so, or they don't understand a preferred equity fund. So I kind of help them close the gaps,
Hmm.
take what the skills that they already have, that knowledge they already have, and translate it into other asset classes. Or if we move into a different market with an asset, help them understand the metrics of the market, make sure that they have all their questions answered.
Yeah, well, that is super important. That's one of the challenges a lot of people have, especially when they're newer capital raisers, newer to dealing with joint venture partners and investor partners, is keeping their investors, well, first of all, getting them engaged in what the heck it is that they're doing. And I don't know about you, but I find one of the big challenges is simplifying the language so that the every man can understand it, because not everybody comes in understanding IRR, NOI, ROI, cap rates, all the lingo that we throw around. We kind of, when you're in the space, you assume everybody just gets it, but that's my experience of this. That's definitely not the case. What are your thoughts around that, Whitney?
No,
The whole
I 100%
simplification.
agree. It's not that we're trying to make it complicated, but it is like learning a new lexicon there for sure.
Yeah.
And so, part of my role is to, really like, have a quick conversation with the investor, help them understand their goals, risk, and timeline.
Hmm.
Um, and then figure out what do they know, what do they not know, and then make tangible connections. Right. Again, kind of like meet them where they're at, hold their hand, and then like walk them to the next step. Because so many investors that I work with, they have a depth of knowledge. They've bought their own single family property before. Maybe they've even invested in, single family property and small multifamily property. They just don't, you throw the word syndication at them, they don't realize that all I'm doing is saying, hey, Dave, you want to go buy an asset together? You bring the money, I'll bring the time, knowledge, and expertise, and we'll split the profits. That's really what we're trying to do at the end of the day. And then I help them demystify, like, who gets paid what and when, and, all these, like, legal terms, just really kind of, like you said, strip it down to plain language, so they can fully understand what it is that they're getting into. Because, one, a confused mind doesn't buy, and
Yeah.
two, like, the complexity will kill the deal. And so it's really doesn't have to be that complex.
Right.
There's just some, obstacles that we have to overcome here. And most importantly, it's closing that gap on knowledge.
So what recommendations would you give to somebody who's in the trenches doing stuff and perhaps on the analytical side? How do you help those kind of people really simplify their language so they can explain their deals or they can explain the concepts to somebody who's not at that level?
Are you talking about somebody who is an active investor that's maybe trying to bring somebody onto their
Exactly.
deal?
Yeah, yeah, yeah.
Well, so, there's a couple of different analogies that I'll use here. One, think of it as, you have to uncover what learning level that investor is at. So are they at kindergarten? They don't know anything. They might know a couple numbers, maybe a few colors, got like 10 of their 26 ABCs, right? Are they somebody that is like, sixth, seventh grade that, like, yes, they know the math, but they don't know how to implement. They don't know how the world actually works.
Yeah.
Or are they somebody more at the college level that, like, yeah, they've done deal after deal after deal. They understand how things work. They just need to know how you do it.
Mhm.
Right. So that's the first thing, is really slow down to figure out which category does that investor fit in.
Mhm.
And then from there, now you're matching, educational topics to where that investor is at. If you're dealing with somebody that is like the kindergartner, an investor that's, more in that entry level, they need to understand and remember the terms. Okay. They can't jump into analysis on a deal. So you got to match your education, and your language to what they need right there. Okay. If you're somebody like they're talking to the middle schooler, okay, now they understand how to do the math. They understand how to multiply fractions, divide fractions, all that sort of stuff. Great. Now you got to teach them how to apply it to your deals.
Right.
Okay. And then if you're dealing with somebody who's more sophisticated, they actually just need to, like, understand who you are and why they should know, love, and trust you to be able to handle their money. And so, the first part is what I call match, step, lead. And the second part is understanding what part of the taxonomy, learning taxonomy, you need to, match that investor to.
Very good. So it sounds, what do you find, because you've been doing this for quite some time with a few different companies, I would imagine. So what is kind of the typical time frame from investor lead where somebody puts up their hand and says, "Hey, Whitney, sounds interesting. What are you guys doing?" So you just starting the ball rolling to get converting that person into a first time investor with you guys. What's kind of general rule of thumb about what's involved in that
Mhm.
dance, that play there?
Again, if it's somebody that it's already knowledgeable of what passive investing is, and I just have to close a quick gap on, like, what this
Yeah.
asset class is or who we are, or maybe they're a current investor and they just need to know, like, why should I invest with you again? Very short timeline, maybe 30 days.
Yeah.
If it's somebody who is, pretty far developed, understands who they are as an investor, their goals, their risk, and their timeline, and they're, just trying to, create their, they're kind of that teenager, that middle
Yep.
schooler, so to
Yeah.
speak, that might be like 3 or 4 months.
Hmm.
If it's somebody who's just new to the syndicated space, I would say oftentimes, if we're starting at the very beginning on how to, understand goals, risk, and timeline, that operators, markets, and deals, I would safely say that's probably a 6 to 9 month relationship.
Yeah, that sounds about right. And have you find, like, I would imagine that for you guys, even those kindergarten level people are probably accredited or sophisticated investors. Like they're not dummies. They just don't know anything about real estate, right? They're very successful in other areas. We just need to kind of bring them up to speed with what we're up to. Has that been your finding?
Oh, yeah, I'm not suggesting that they're 5 years old. I'm
No,
suggesting
I
that in their
understand that.
level of knowledge, they're more of a beginner.
Yeah.
And, here's the thing, anything that you've ever done in your whole life, you've always started off as a beginner.
Yeah,
If
exactly.
you're a doctor, a lawyer, an engineer, there was a time where you didn't know anything about that profession. So, that's where we make it very safe and very, open and transparent about like, hey, this is where we're at together,
Mhm.
and this is like the gap that we need to close, and let me help you with that. We have a lot of free
Right.
educational material to help
And at the
investors
same
close.
time, really not making them feel dumb. That's a huge
Oh,
part of the whole thing, right?
yeah, I mean, I think that's where, if we go back to our example of the active operator that's very analytical,
Mhm.
um, I think that's probably one of the obstacles they stumble into is that they're assuming that everybody can speak at their level. And
Mhm.
it's not they're trying to intentionally make somebody feel inadequate or less than. It's that they make the assumption that everybody is already at their education level about that particular asset or market or whatever. And so, you just have to you have to go in with curiosity and meet the investor where they're at. Really, ask a few questions to uncover where that investor's really at.
Do you find that using visual aids is helpful with this kind of education of investors?
I do. Like when I
Mhm.
do all my education, I do mostly PowerPoint
Mhm.
presentations. And some people, and I keep them really short, between
Lots of pictures.
5 to 20 minutes, lots of pictures,
Yeah.
actually limited number of graphs. I mean, I've heard that
Yeah.
feedback, and I'm like, I'm actually trying to make this as stripped down and simple for you to understand as possible. And then when we're ready to talk graphs, I will meet you with graphs. If you want like the Fed
You want
reserve
charts and
chart,
numbers and yeah, all that stuff. No worries. Got it.
yeah, we got that. But first I need to make sure that we both have the same language that we're speaking together.
Very good. Well, Whitney, this has been fantastic. Thank you very much for sharing some insights and knowledge, not only about express car washes, but the other side of the whole thing, which is how to communicate more effectively with your investor partners. So, if our listeners or viewers would like to connect with you and find out more about what you're doing and perhaps get some help with whatever they're up to in real estate investing, where should they go?
Yeah. If you are actively looking to invest in deals, passive deals, you can reach out to me at passiveinvestingwithwhitney.com. I've got some free goodies for you. We can jump one-on-one on a call and understand your goals, risk, and timeline and your investing needs. And then we can talk about open deals that we have.
Fantastic. Well, thank you very much. This has been great, Whitney.
Thank you. Such a pleasure.
All right, everybody, take care, and we'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.